Hey guys, good morning. August 10th, 2020. You got to act quick this morning. Basically, just short the hell out of tech. This is going to be a very short video because everything we've been talking about it in the last 30 days is finally coming to fruition, guys. So, shorting the bounce is the simplest key strategy that will get you paid. The top trade for the day is MercadoLibre, ticker MELI. Short the bounce after earnings. So, pre-market right now, guys, the stock is trading around 1270, 1280. Expect two case scenarios with MercadoLibre, okay? One, it's going to do exactly what Tesla did a few weeks ago, meaning not only it's going to sell off today, but it's going to sell off in the following day as well. So that's basically gives you a potential $150, $200 drop in MercadoLibre. Again, despite of the good earnings. See, they're selling the stocks despite of the good earnings right now, meaning the institutional investors are. So use that as a chance. It's bounced pre-market on very, very light volume. Again, we're seeing some characteristics that Amazon has shown. So Amazon results were super great, right? The stock bounces. What happens next? It loses $80 when first, half an hour of the trading session. Okay, similar trajectory is expected in MercadoLibre. So I mentioned the one case scenario is going to do exactly what Tesla did, meaning this sell-off is going to continue. The second type of scenario, meaning it's going to lose some of the initial gains pre-market, and then they're going to come in and start buying the dip. But in either case, guys, MercadoLibre is good for at least a $100 drop. The stock doubled in the last 3 months. They're going to take profits. That's a given. That's the simplest trade of the day. Now, with that said, all of a sudden, there's no buyers in Tesla. There's the buyers in W are gone, so short the hell out of W. Zoom. All of these stocks, guys, they have one common characteristic, okay? Not talking about Kodak, which we were making fun of 5 days ago when the stock was at 25. Well, today it's at $7, $7-8 on Kodak, guys. Congratulations, that trade made a killing, over 1,000% for some of you guys. So, Rita, that's a new ticker we haven't been talking a whole lot about. And the only stock we're bullish on today is ICPT. Now, it is a cheapie at this point. At some point, ICPT used to be a $490 stock, but it is at 50 now. It's likely to probably move to 55, 60. So if you have a small account, these options are probably going to be cheap. But, again, you're always better off buying one good solid contract, like, for example, in MercadoLibre for like $20, because it could be worth 10 grand. Right? Or opposed to maybe buying 20 ICPT for like 30 cents and maybe not making nowhere as much as you can on one contract with Mercado here. So bottom line is we're expecting a breakout, complete breakdown of the market actually. We're targeting for that on Thursday. Now the market could slide as early as today. So basically, guys, you just want to pull the trigger. The one common thing, guys, all of these sticker symbols have in common, okay? We're seeing this is what institutional investors are telling us. They're saying, oh, well, there's still plenty of room for a market to break out here. There's plenty of room for these stocks, Corona-related names, to go higher. But what they're really doing, indeed, they're taking money out of these. Because all of these stocks, they're up, double, triple, quadruple in some instances, like W. They're up 15-fold. And all of that was a result of these coronavirus benefiting these key names. So at this point, institutions are taking the money out of these stocks and they have nowhere to go but lower, while still, if you turn on, Bloomberg, CNBC, I mean, all you're going to hear about is like, oh no, everybody's still super bullish. I mean, this one guy, Tom Lee, right? I mean, these guys, he's bullish 100% of the time. It doesn't matter what, right? He's been bullish on Bitcoin since it was 20,000, and, Bitcoin is still nowhere close to that level. He caught it at 20,000 and has been a bull on it ever since then. So what I'm saying is, the guy's got no rhythm, no rhyme. Certainly the timing is off. So when he comes out on CNBC on Friday and says, oh, the market is going to go up 30% higher from here, I'm thinking to myself, damn it, that's got to be exact timing signal that everything is about to fall apart, because this guy, he never gets the timing right. It's easy to be a bull all the damn time, right? We switch from bull to bear when it makes sense. We switch from bear to bull when it makes sense. We're the first ones to nail the bottom in March when everybody was scared to buy calls. We're already buying calls. There's been multiple instances where we have been a bull, guys. But there's no reason to be a bull here, especially that this guy's coming out now and says, oh, market's going to go 30% higher this week, meaning like this week, August 10th for August 14th. Guys, that's a definitive extra sign, okay, that the market is about to collapse here. Now, by collapse, we're not saying a 35% drop this week, but hey, we can see 5-10% drop by Friday. So stay with your puts, okay, and short the hell out of these names. Zoom, guys, we could see Zoom at $200, and it's still going to be freaking expensive. So Amazon, mRNA, TDOT, all of these names, guys. RNG, that was a killer trade last week, right? We suggested taking the trade when the stock was at like 295 or 300. I mean, the stock finished on Friday like 260. Guys, a lot of these trades are really good trades, and they have plenty more room to go lower. So they just starting to take the money out of these. Amazon remit, guys, fucking 800% on Amazon on a Friday with the 3,200. Guys, all you have to do is just stay with the trades. Start jumping in and out of these things, okay? So stay with the trades. MercadoLibre, that's the trade of the day, 1,200 strike puts. The stock is right now pre-market 1,250, 1,280 range. Just pull the trigger, buy the 1,200 puts. Let's rock and roll. Maybe collect some gains about 1,150. You know, it should hit it somewhere today, by tomorrow for sure. So the reversal is definitely in the making, guys. And so what is suspicious, and it's not suspicious to me, but it should be suspicious to, you know, most of the traders maybe have not done it as long as I have. So Wall Street basically says that they're betting on a breakout. So this cup with a handle we've been talking about, Wall Street is basically saying, oh, this Tom Lee guy, a bunch of other guys, oh no, we're moving higher, it's crazy, but yeah, we're moving higher, we're going to keep buying these names because they're a lot cheaper than bonds, they're a lot cheaper than anything else we can put our money at right now, so let's just buy the hell out of this, keep buying them. Okay, but what they're really, okay, while they're saying that, their action is exactly the opposite. Okay, so because if they keep buying, how the fuck these things are basically starting to collapse. Okay, on Friday, okay, we had a sharp reversal in specifically technology stocks, even stocks like Facebook, right, that we send out the alert about right at the very, very top, when like $1 from the top. Guys, these stocks are going lower. Okay, so just buy the damn puts and stay with them. Don't day trade this shit. Just keep them through Friday. They'll make you money. Simple, period, easy. Just do it. 11, 6, 7 are the probabilities of the moves today. But even if we get overall like a 7, a miniature 7 in the market, guys, just remember the stocks, the technology stocks, they are destined to continue sliding lower. And that's what we're likely to see. The market is still highly complacent, but we're getting some spikes in option premiums because I think this is just the iceberg of an unwind that's about to happen here over the course of this week and next week. So August 7th overall on Friday, guys, was a tough day. It was a move 5 with a 7 behavior, with an 11 behavior, I'm sorry. So overall, move 5 typically don't happen with elevated VIX above 20, but in this case, it kept doing the same damn thing pretty much all day long. Okay, typically when we get a move 5 on a Friday, on a Monday we can get a 6, like basically complete unwind where the market sort of holds on maybe for half a day and just boom, it just starts collapsing right there. So these are some meaningful signs when we combine all of them together. So this 5 could be a pretty predecessor because we could have got like a crazy 7 based off the job report or the way the market was interpreting, right? Hey, it's a better number, it's exceeded expectations, blah, blah. Guys, nothing like that is really going on. So the fact that we got a 5, which is a lesser bullish move than 7 by a great magnitude, I mean, this is actually almost a bear sign by itself right there on the Friday. So 2-day sequence is 7-5. Basically, you see you got going from a bullish move to a lesser bullish move, and the market is definitely stalling out at these levels, 7, 7, 7, 7, 5. The one thing we've discussed in the last video about these 7s, guys, is they all accompanied by a move 11, including the 5 move that we got in on Friday. So it's not your real bullish sequence. And this is why I'm so certain, basically 99.999% certain, guys, that these 7-7 sequence is actually a fake sequence, because we're observing this consistent of move 11s inside of that sequence. The market will move lower opposed to what the media wants us to believe at this given moment. And of course, pre-market between Sunday, Monday action, basically after Friday, it looks like we got a miniature pattern of a head and shoulder here, so that's extra catalyst for the market to actually move lower. So just remember this: bounce, drop, bounce, drop, bounce, drop. That is the behavior of the market, and that is clear the sign of a top. VIX continues to hang in there above 20, guys. The main key point on the VIX is bull markets don't continue to run when VIX is above 20 after being above 20 for like, 4 months. As a matter of fact, I will take some time this week and I will go and calculate every instance where VIX has actually held up above 20 and the duration. And I believe this is actually could be, one of the top 2 time frames or 3 time frames maybe in the US stock market history where VIX has actually been above 20 level for like 4 months in a row without dropping below 20. So, this is meaningful because the market's pretty much within a few points from all-time highs. The VIX is nowhere near what it would typically be if this bull was to continue to rocket higher. So, guys, take this as a sign. This is the best time to short the hell out of this market. Let's rock. I'll catch you on the next trade soon.